we're going to look at SPY. I hope you enjoyed the way I broke down that analysis in the gold market. That pretty much gives you an idea of what we're looking at now. This is the great megaphone that we are looking at. I call this the great megaphone because you can see it is a great megaphone. And we moved up to the top of it after having that huge break in March. And now where we are is coming up to this top area right up over here. And like I said in the beginning of the show, we're still in a range. I mean, we've been in this range for about 4 months, and we're still there, and now we're moving up to the top of the range. Now, this was very, very close to breaking down, but did not break down. And it's pretty unusual when you get to break below an intermediate 78.6 and then move above an intermediate 78.6. That only happens maybe about 15 or 20% of the time. In this case, you can see it's done that. And now we're getting up to a lot of resistances. And like I said, I thought there was a potential for a new high. It's pretty good, and edging out a new high and getting up to these resistance areas. So this one right over here, the old high, is 358.75, and this is a fib area, fib extension zone right over there at about 361. So that's really where I think we're going to get up here. Now you can see the minor cycle right over here and how that brought that decline. When you have a big upward momentum condition going on, you can see the momentum here, then the minor cycle doesn't give you much decline. When they join up together, you get a little bigger decline, as you can see here, or a massive decline like you saw right over here. And this doesn't happen over here until February or March. So that's where the real bigger risk is, out in February or March to the downside. For now, we're likely to be in this choppy toppy area, in my opinion, before we make the top. This, as you can see, is the head and shoulders top that I think is forming. I thought it broke down, but it obviously didn't. It got just kind of slightly below that, so it's tilted a little bit differently than it was. And see this right over here, that's our target. On the downside out in this February-March period, where it makes the head and shoulders top measurement and comes to where these timing lows are right over here. So somewhere out here, February-March, pointing down to about 300 in the spider. So early in the show I said maybe 7-8 to 1 risk reward on the downside. Well, that's where this comes from. That the likelihood is that we make a new high slightly, maybe get a double top, maybe fail slightly below it, and then start to come down. The minor cycle right over here comes down into the early part of December. This is in alignment with what we believe is happening in the NASDAQ patterns, which got this big lift, and we don't think they're going to be able to hold up, and likely to see the NASDAQ leading the market on the downside into this period in December, but not a huge decline. You know, we're only looking for it to get down to these same lows that they were at now, based on this pattern, and then again moving up into the early part of the year before they turn down right over there. So this looks like an extension of the range that we're going to be in, and kind of, again, I'm going to call it choppy toppy period that we're looking at right now. So that's the S&P 500, and slight new highs likely, and then moving down to some modest lows and very significantly lower lows coming out into the later in the winter, February and March.